going to see some continued green, continuing what we've been seeing in the after hours and pre-market. Things are looking pretty good. We've got some exciting news going on. Some cool stuff is going on in Russia and Ukraine. We're seeing some troops getting deployed by NATO, not in Ukraine, but near the border. So we're going to talk about that. We're also going to talk a little bit about some unfortunate studies that have come out recently regarding millennials and the way they handle their personal finances. It's kind of scary stuff. Anyone who's watching the stream probably doesn't fall into that category, right? You're all probably pretty well versed in personal finance if you're watching the stream. So hopefully none of these statistics apply to you guys, but it's pretty scary stuff for the country if these statistics hold true for most millennials. So it's we're going to start off just admiring the S&P for a second, noting that it has actually moved up in the after hours and pre-market. That over the course of the past 30 days, while we're not at the highs, we are on a pretty sharp upwards trajectory, right? You can see we've been moving very well over the past week and a half, and hopefully that's going to continue, right? We are getting some news out of Russia and Ukraine that's been doing decently for us. So before we start on all of this, good morning, Rich M. and Matthew. Good morning, guys. Welcome, welcome, welcome. We've got, first off, this scary study that came out, okay? This came out just about a week ago, and it shows millennials would rather water their plants than handle personal finances. A new study has shown scary, scary stuff. So this survey of 2,000 millennials released last week found that managing money ranks dead last on millennials' priority lists, okay? They're more likely to play with their pets, care for houseplants, surf the internet, or think about what they're going to have for dinner than they are to think about their personal finances. Now, I know if you're watching this stream, it does not apply to you guys, right? You guys are obviously very well versed in personal finance and all kinds of financial topics. I'm sure if you guys are this deep into the pit, right? But a lot of people apparently don't even check their bank accounts. Get a load of this, guys. This is actually kind of crazy. Only 27% of millennials said they check their bank accounts once a week or more. I mean, crazy stuff, right? Only a quarter of people are checking their bank accounts, and almost half of people said they didn't even know how much money they have in their accounts. I mean, how irresponsible, guys. I'm not pretending that I know exactly to the dollar how much I have in my bank accounts, but I always know within a range of about $1,000. It's within a couple $100 of what I've got, right? So it's not like I'm completely out of the know, but about half of people apparently have no idea what they've got in their bank accounts. And a lot of this is actually because of auto pay, okay? More than half of respondents said they use auto pay to pay most of their bills. And they do it because of convenience, because of potential savings, fewer worries about late payments. It makes a lot of sense. I use auto pay for a lot of things, but I still end up checking the bank account. And in fact, I've actually set it up so that I get notifications on my phone when credit card charges go through and whatnot, right? So I end up knowing when autopay ends up paying bills. And I do think autopay makes a lot of sense, right? You don't want to have to worry about paying bills and wasting your time, just a couple minutes every month. It ends up adding up, right? You have to log on to the site. You might forget to do it. So it does make sense, I think, to use autopay, but you should still be at least checking your account every now and then, right? That makes a lot of sense to me. So unfortunately, it looks like a lot of millennials are not engaging in financially responsible activities. They need to be referred to the stream, guys. They need to be shown the stream. Anyone you know who's not engaging in any kind of personal finance activities probably should be, because there really is pretty big upside. If you look over the long term, there's pretty significant upside in the stock market, in the crypto market we found over the past couple of years, and even just saving the money instead of just spending it. Unfortunately, this study found that a lot of people were spending more than they otherwise would have because they were just using autopay. They weren't paying attention to what they were spending, and the costs just added up when they weren't actually looking at what they were spending, right? They didn't know how much it all added up to. They just kept on swiping that card and paying it off automatically every month, not looking. And they end up not having very much savings either, right? So it's scary stuff. And you can see right here, this chart, the S&P 500 historic annual returns, you can see that a lot of years, even since just the 1930s when this started getting tracked, there's a lot of years that it's down, right? There have been some significant down years, fewer in more recent years than in the past, right? Obviously in the 30s and a little bit since then, right? Until up the 80s about. We were seeing some significant amount of red years here and there. Now those have become a little bit less common. We're currently in one, right? 2022 is unfortunately a red year for the stock market, but that doesn't mean that we can't turn this thing around, right? That doesn't mean we can't turn the stock market around. And at the very least, if you look at the stock market, you'll see, obviously, yes, the S&P has gone up quite a bit, but last year, if you look at the Russells, smaller market cap stocks, it was still up, I believe. If we're gonna figure out how much it was up by. So it was still up. It was still up by 13%. Look at that. Since only the very beginning of the year, though. If you look back over the past 365 days, then we're down about 5% on the Russells at this point, and those aren't even the smallest of the smallest market caps. A lot of stocks. I mean, you look at some like Clove, and over the past year, they're down massively. Sen is another one that is coming back in a big way, right? Sen is down dramatically. Space down huge. Even big companies like Robinhood, some of those are down massively from their IPOs. MindMed, AMC, although that one did have a bit of a jump, right, over the beginning of 2021. But a lot of these stocks are starting to come back. I think we could see quite significant green in the near future. And I'll pull back up this chart for a quick second, and you can see that a lot of the years, people like to talk about the average gains that you end up seeing in the S&P and whatnot. And a lot of years, you end up seeing much larger gains than those, and those end up getting offset by the red years. So a lot of years, you do end up seeing much greater than 10%. I mean, upwards of 20% oftentimes. You'll end up seeing 23% in 2009, 29% in 2013, 19% in 2017, 2019, and 2021, both over 20%. So huge returns oftentimes, and that's just in the S&P. That's not even in riskier, smaller market cap stocks. A lot of the time, those can outperform in big, big ways, and we'll see. I think that we're potentially entering a period where we're probably going to see big, big returns in these smaller market cap stocks. Sundial being one of them, right? Sundial is actually up about 2% today, so we'll see what we get stock price-wise over the next while. But the point of this being that millennials really need to start taking a little bit more control and a little bit more responsibility regarding their personal finances. They certainly need to be spending more time with their personal finances than they do spend watering their plants, right? At the very least, that's what we need. Obviously, I'm a big fan of the environment, and watering your plants is a really good thing. But I think that one of the reasons why a lot of these millennials are unaware of or just not engaging in these investing activities, these financially responsible activities, is maybe because they've never been shown this, right? A compound interest calculator. One of the coolest things that I was ever shown, and very fortunately I was shown this at a very young age, right? And I learned very quickly that a little bit of money over a long period of time, if you're investing it and doing responsible things with it, could actually become a pretty significant amount of money. I mean, say you have an initial investment of $1,000, right? Then you put in $500 a month. A lot of people, that seems like a lot of money to them. A lot of people, that seems like not very much, and probably put in more, right? Over the course of 40 years, if you're just earning 10%, less than the average on the S&P over the course of the past while, I think it's maybe 10.5% on average for the S&P. So below the S&P's average. If you do that calculation, $500 a month for 40 years, you end up getting $2.7 million. So pretty impressive stuff. And once again, that's just throwing it in the S&P. That's not even doing any real work, right? You could even set it to auto pay to the S&P, right? You could just set it to automatically invest, auto withdraw from your bank account and invest in the S&P. It would be relatively easy to do. And obviously, past performance isn't a guarantee of future results, but I think we're only entering times where these things are going to be compounding more and more, right? As we get more technology, companies are able to grow more quickly, more efficiently. They don't have any, or they don't have as many costs associated with employees. They're probably going to be able to grow money faster and faster looking to the future, probably faster than this 10% average in the S&P, especially if you're investing in more growth-based stocks, more tech-heavy stocks, right? Stocks that are going to be able to use the leverage that technology offers. I think you're probably going to be able to do even better than this. Not a guarantee, right? Just what I'm thinking at the moment, but it is something that shouldn't be ignored, most likely, right? I think that a lot of people, especially millennials, unfortunately, are ignoring the potential for investing, and it's a really sad thing because it's one of the best ways, in my opinion, to really get in a good mindset and become financially stable and secure and not have to worry about things day to day. I mean, you're looking at something like this arm right here, right? This arm that I just hurt, probably going to require surgery. That's a couple $1,000 at the least, and I'm not too worried about it, right? Because I've been financially responsible. A lot of people, though, could not handle a big expense like that, right? A lot of people are living paycheck to paycheck because they just got their stuff set to auto pay. They go out to eat and get expensive stuff and buy all kinds of clothes and all kinds of things, right? There's all kinds of stuff. I don't even know what people spend money on, but a lot of people are spending a lot of money out there. They're not investing or saving their money. Big mistake, in my opinion, right? I think you should be saving a whole lot more. At least, at the very least, you should be saving maybe 10 to 20% of your income, if not more, is my personal opinion, right? I think you should be saving and potentially investing part of that, potentially putting some of it into some sort of emergency fund. But definitely, you got to do something with your money, guys. That's just my opinion. Just my little rant for the first couple minutes of the stream that I wanted to get out there because I did see this study, right? Millennials would rather water their plants than handle finances. Horrible stuff, right? You gotta take a little bit more responsibility, guys. And I know you all are, right? If you guys are watching the stream, you're obviously taking a little bit more responsibility. But if you know anyone out there who's not, it might not be a bad idea to get in touch with them and tell them they ought to start looking into saving a little bit more, looking into investing. Help them out because at the end of the day, we're all living in this country together, and it's because of people who don't save and don't have cash or investments to fall back on that when we do hit hard times, like we did during the pandemic, during COVID, the government has to print a whole bunch of money, and now we're looking at pretty big inflation. So, it's that kind of stuff that ends up hurting the country and even you, right? Even if you're being responsible, you can still be hurt by the irresponsibility of others. So make sure, if there's anyone in your life that who could use some advice, make sure to, share that with them and tell them what you know. So good morning, guys. We've got a whole bunch more people in the chat. Jeff, Shotgun Cat, Meme Generator, Niner Zulu, N. Bennett, Juan, Pedro, Greg, Joshua, Travis, and Susan. Good morning, guys. Welcome. That was my little rant on why you all should be not just financially responsible yourselves, but also helping people out, people you might know who might not be the most financially responsible. So now we'll move in to a little bit of the current events that are going on, right? Boris Johnson, UK Prime Minister, says Putin has crossed a red line into barbarism as the United Kingdom's slaps on more sanctions. So he says it is very important we work together to get this thing done. And the UK has today announced 65 new Russian sanctions. And these sanctions have targeted Russian railways and defense company Kronstadt, the main producer of Russian drones, as well as the Wagner Group, the organization of Russian mercenaries, reportedly tasked with assassinating Ukrainian President Zelensky, right? So apparently Russia has, at least it's been reported, that Russian mercenaries have been tasked with assassinating the Ukrainian president. And that would certainly be a big hit to Ukraine because I know he's a big rallying symbol, right? A big figurehead, right? A huge leader in Ukraine. And without him, things would not be looking too good, right? He's been very good at keeping morale going well. And who knows what would happen if he got taken out. So they're looking at sanctioning the mercenary group responsible for taking him out, or tasked with taking him out. 6 more banks are being targeted. And sanctioned individuals include the billionaire oil tycoon Eugene Schvidler, as well as the founder of Tinkoff Bank, Oleg Tinkov. So a lot of new sanctions coming in from the United Kingdom. Boris Johnson certainly is not happy with Putin, saying that he's crossed the line into barbarism, and I think a lot of people would agree with that. It is certainly not good what Russia's been up to lately. So NATO leaders are also set to up the pressure on Russia. Okay, they're doing this by committing major increases in troop numbers along their eastern flank near Ukraine. Not in Ukraine, right? They're not actually going to engage Russian soldiers or anything like that, but they are increasing the troop counts near Russia, near Russian soldiers, at least just to put up the pressure, right? To show Russia that, hey, if they do happen to take Ukraine, they're not welcome going any further than that. So all things considered, a decent move on NATO's part, not what a lot of people were hoping. Zelensky has actually been calling on NATO for more swift military support. And tell me what you guys think of this, because I think it's almost it seems like when he says it in this way, right, that I'm about to show you guys, it doesn't seem like that big of an ask, but at the same time, it seems like a somewhat large ask, right? So listen to this. Hold on. So he explains to these NATO members, Ukraine does not have powerful air defense systems. We have far less aviation than Russians do. So he says, I ask you to reassess your position and think about security in Europe and in the whole world. Now, this next sentence is the one that really got me. He said, I guess he's talking to all the countries in NATO, but he says, you can give us just 1% of all your planes and just 1% of your tanks, he added. Now, I have no idea what percent of our tanks and planes we've given over to Ukraine. I'm guessing it's nowhere near 1%, right? 1%, especially if you're considering 1% of all the countries in NATO, that would be a pretty significant force to be reckoned with. At that point, the Ukrainian military might outnumber or at least outgun what Russia has deployed in Ukraine. So it would be pretty crazy if we ended up giving, if not just the U.S., the biggest military in the world, but all the members of NATO gave over 1% of their planes and 1% of their tanks. That would be pretty funny, I think, to see what would go on in Ukraine after they had that much firepower. It'd be interesting. So look at this. 3 minutes ago, new story. I haven't even read this myself. NATO calls on China to join the rest of the world and clearly condemn the brutal war going on in Ukraine. So the leader of the 30-member NATO alliance called on China to uphold the international order and abstain from supporting Russia's war effort in any way. Our message to China is that they should join the rest of the world and clearly condemn the brutal war against Ukraine. Well, we'll see what China ends up doing. Most likely not much, but you can see the stock market's looking pretty decently at the moment, right? We have a nice little morning V forming, not just in the overall S&P, but in BBIG, a stock that is actually up a bit as well, right? BBIG up 7%. A lot of people are hoping for a squeeze on this one. We'll pull up some data about that in a little bit. Sundial had a beautiful bounce off of 61 cents this morning. Beautiful bounce. And yesterday, it played around with 61 cents pretty much the whole day. It looks like, as of right now, as of these most recent couple of bars, it may have decided which direction it's going to head in. So hopefully, it continues heading to the upside. And continuing this beautiful uptrend that we've been on for the past week and a half. Hopefully making new highs, right? If it makes it up to 66 cents just about, it will officially be making new highs. And ahead of their earnings call, ahead of the Alcon acquisition, we've got a whole bunch of catalysts that could be driving Sundial up. Obviously, I'm not going to pretend that there's only one way this could go at any point. Maybe, the Alcon acquisition goes through and whoever has inherited those Sundial shares, they might decide to sell some of them, right? It's possible. But I would expect probably more bullish stuff than bearish stuff, right? That's what I would be thinking. I'm thinking Sundial's probably going to be more bullish. It seems like we're really entering a big bull cycle. Not just on Sundial, right? Not just on Sundial, but on stocks in general. Very fortunately, we've actually been seeing a lot of positive momentum on stocks overall, and we can see that exemplified in the S&P. The S&P has finally, we'll pull out the yearly chart, has finally been recovering in a significant way. And although the past couple of days it has been sitting around a little bit, it's not been, skyrocketing the past day, it's still significantly above where it's been the past couple of weeks. So good stuff in not just the S&P, but especially smaller market cap stocks. We'll pull up a stock like Sen that just about a month ago was at $1.05 at the lows. It's now at $2.67. So it has far more than doubled. You can look at another stock, Clove, down at $1.95 at the lows just about a month ago again. Now it's at $3.66, so almost doubling there. Not quite doubling, but getting close to doubling. CEI, an oil play. It's down 2% today. Oil's not moving too much, but also down at lows of 45 cents. Now it's up near $1. Impressive stuff. A lot of these stocks have been hurt pretty dramatically over the past couple of weeks and months. But now it finally seems like these smaller market cap stocks are really coming back in a big way. Muln, MULN, Mullen Automotive. I know a lot of people are in this one. Potentially some people are in this one for more short-term reasons, but regardless, it still goes along with the overall narrative that these smaller market cap stocks have been decimated since November, right? This stock was at 15.90 at the highs back in November and has been pushed down to 52 cents. I mean, that's absolutely crazy. Look at this. So from the highs of Mullen to the lows, it got pushed down 97.5%. And to get back to the highs from that point, that would be 3,400% gain on the stock. Now, to get back to the highs from where it's at now, it would be a 400% gain on the stock. It's already gone through some significant upswings. And I'm not saying that these stocks are instantly going to be back at the highs, because obviously the highs are the highs, right? They're not instantly just going to shoot back up there. Maybe some of them will, but probably not all of them, right? I would expect a more steady, slow and steady gains on these stocks over the next couple of months, right? I would expect that they would come back with the overall market, that the stock market indexes overall, especially the Russells, would probably start getting back to their highs and probably start making new highs. We'll see. A lot of these companies have been having really good developments. A lot of them, obviously, we can name a few. Sen has been making a whole bunch more vehicle or has been receiving a whole bunch more vehicle orders, is expecting to have about 22,000, I believe, over the course of this year. 22,000 vehicle deliveries, making it a fairly significant player in the EV space. Mullen is, you guys know, has, wherever MULN is, there it is, has been having some positive developments with their battery packs. And Sundial, we're going to see what they say at their earnings call. Obviously, a company that is about to become part of Sundial, Nova Cannabis, just had really great revenue growth. So a lot of these companies have been making positive developments over the past couple of months, right? They've been growing as companies, but their prices have actually been getting slashed and decimated. So, it just creates a very interesting, a very unique situation where you can potentially be buying these stocks that have been becoming better and better, all the while they've been getting hurt price-wise. And Mike Steele, thank you, man, for the super chat. Feel better, sir. I'm certainly feeling a whole lot better. I mean, I'm really shocked that the arm is going to require a surgery. And we'll see what the doctor says. I've got an appointment on Friday. Hopefully, I'm really hopeful that he'll look at it and say, oh, it's not as bad as we thought. But that's probably wishful thinking. So I'm certainly feeling a lot better, thanks. But something that is going along with the idea that these smaller market cap stocks have really been decimated, we actually posted it to the Locals account. And we posted it a bit ago. If you guys want to follow the Locals account, feel free. Hit the top link in description. You can see this kind of stuff, right? I post this kind of stuff every day. I've been missing it. I've been slacking on this. Since I hurt the arm, I've been slacking on this. I will be getting back into it. Over the next couple of days, I will be posting daily again. I normally do post daily, but feel free to follow the Locals account. You can see this kind of stuff, right? This is just one statistic, right? Chart of the S&P 600 small cap stock PE ratios. If you pull up this picture, you can see this little red line I actually drew on the chart myself. But essentially, as of March 8th, these stocks have gotten their PE ratios quite low historically. Looking back all the way to 1999, there's only been about 6 times that these stocks have really dropped below this red line, this point at which we're at. And keep in mind, all of these times were before the massive money printing that we did over the course of the past 2.5 years, right? So much money has been printed and injected into the system. We're experiencing big inflation. And I would expect that these companies' earnings would probably be higher due to all the extra money in the system, right? All the extra liquidity out there, all the extra cash that people have. We would probably see higher earnings because people just have so much more cash to spend, right? There's just so much more money in the system. You've got to start valuing these things most likely higher in terms of dollars. I would expect to see stocks rising for that reason. In addition, you can see their price earnings ratios historically pretty darn low, and it can only sustain itself here for a certain amount of time. And keep in mind, their price earnings ratios as time goes on typically rise, right? As they become more solid companies, as they have further developments, as they grow as companies, their price typically rises, and the price earnings ratio could even stay the same while the price is rising. But I would expect that we would, in addition to seeing rising stock prices in terms of price earnings, also see price earnings ratios moving up, meaning stock gains should be even greater. But we'll see. We'll see what happens, right? Nothing's a guarantee. Just a historical analysis right here of what the S&P 600 small caps are looking like. Once again, not even the smallest of the smallest market caps, right? So I think there's some significant upside. And if you guys are interested in joining the locals, I post all of this stuff for free. All you have to do is hit that top link in description. You can make an account there for free. So if you guys want to do that, feel free. You can also support the locals channel if you wish on the locals channel itself. That's something you can do if you wish. But not mandatory. You can just also view the stuff that I post for free every day. So feel free to do that if anyone's interested. If you're watching this on Rumble, then you can just hit that red join button that is above the video. So feel free to do that if anyone's interested. Now, we've got this next story. Interesting thing going on in Russia, okay? Russia has opened back up their stock market. Wild moves in Russian stocks as the market reopens after a month-long shutdown. So trading has resumed in 33 different Russian equities, and it's actually looked pretty good, right? It's actually been pretty positive price action, and it's because of a couple of restrictions, most likely, that we've seen positive price action, right? So, short selling on stocks will be banned. So no one can short Russian stocks right now. And foreign investors will not be able to sell stocks or sell ruble bonds until April 1st. So very interesting right there. Huge reason why Russian stocks are probably looking better rather than worse. And you can see the MOEX Russian index finished trading up 4.37%, parring earlier gains of more than 10%. So we can pull up a chart of the MOEX right here. And you can see this part right here is where it got closed off on February 25th. And then March 24th, it opened back up and instantly moved up a little bit. Since then, it's actually been trending down. But initially, it did move up. So interesting stuff right there. Now, I would expect that on April 1st, we might see a bloodbath in the MOEX. It's very possible that a lot of foreign investors are just going to decide, hey, I don't want to be invested in Russian companies, either as a personal, a self-sanctioning action. A lot of companies have been engaging in that. Or potentially, they just don't trust what's going on in Russia right now. They think they don't want to be involved in that market because it did just close down for a month. And they don't like that, the Russian government is just purely in control of that market and even stopping them from selling stocks right now. It probably leaves a sour taste in a lot of their mouths, seeing that they're not able to sell stocks if they wish, right? So a lot of people are probably thinking, let's get out of the Russian market. So on April 1st, that will be a day to really look out for what's going on in the Russian stock market. You might see very negative stuff going on there on April 1st. It'll be interesting. I mean, it's not a guarantee, but it'll be an interesting day to look at the very least. Now, sundial looks like is up about 5% today. Really good stuff. We've seen a lot of these cannabis stocks rising. We've seen a lot of them doing quite well. They've been seeing pretty significant gains. So all things considered, good stuff in the cannabis space. A lot of people are expecting for those stocks to be doing very well in April when we're going to be seeing some potentially new cannabis legislation coming in, right? New cannabis legislation from Chuck Schumer. We're hopefully going to see him introduce that bill in April, as long as he's not late with it. Hopefully that will mean cannabis stocks will be very green, right? That's what we're hoping for. So hopefully that will continue. It looks like at the very least sundial is moving up and is getting very close to continuing this uptrend, right? To making new highs on this uptrend. It's only about 2 cents away from doing so. So we wouldn't have to get that much higher to continue this uptrend. And I think we can probably do it before the earnings call, before the Alcon acquisition. And who knows how much those catalysts could be moving up sundial stocks. So we'll see what goes on. But I am very hopeful, very bullish on the future of this stock, right? I think that we're going to see pretty good stuff, especially once we really start getting into cannabis legalization hype land, right? I think that's going to be really good for not just sundial, but Tilray and Organigram and Hexo and all kinds of those, all kinds of cannabis stocks, right? MJNA, since I see James Wood in there, that one's probably going to be doing pretty well also. So I will pull up right here, just for anyone who's interested, some of the top trenders, some of the most active stocks for the day. Obviously, number one is AMC. It's typically at the very top. I'm surprised, honestly, that GameStop isn't a little bit higher up on this list. Now, that's because GameStop, for those of you who were unaware, we'll pull it up right here. GameStop has been doing pretty darn well over the past couple of days. I mean, look at this. It's been boosting itself up, all on the news that Ryan Cohen, a chairman at GameStop, bought 100,000 additional shares. So impressive stuff. It certainly drove a significant rally in GameStop price. It looks like we're pulling back a little bit now. We're down about 8% on the day. But over the past week, just about, GameStop from the lows to the highs was up 89%, really significant. And AMC did end up rallying as a sympathy play. It ended up rallying, and it was up from just a couple of days ago to the highs about 49%. So good stuff on both of those stocks. Right now, it seems like AMC is getting a bit more attention. And let's see what we got on Reddit. GameStop is the 1 trender on Reddit. So a lot more people on Reddit talking about GameStop. And this is actually kind of crazy. Look at this. 1,800 mentions and 114,000 upvotes on GameStop. The next highest amount of upvotes is Tesla with 2,500. So GameStop is getting a whole bunch of attention on Reddit. Absolutely blowing out of the water probably every other stock that's on Reddit. I doubt that they all add up upvote-wise to how many upvotes GameStop has gotten over the course of the past, I believe 24 hours. Maybe it's the past 30 days, but probably 24 hours. 114,000 upvotes. Crazy stuff. GameStop is really doing incredibly well. So look at that. GameStop. We'll see. We'll see what happens with GameStop, if it can maybe move up on stock twits and whatnot. Obviously, price appreciation is what people are looking for. We'll see what happens with that, though. We will touch on CEI. Drift and Juke TV is asking, did we talk about CEI? We'll pull up CEI, and I will also pull up oil. That typically explains what's going on with CEI. So it looks like, so CEI down about 3% on the day. Oil down about 1% on the day. So that pretty much explains what's going on with CEI, right? We can look at let's look at the 5-day chart. You can see that oil had been rising, as has the price of CEI over the past couple of days. It's risen a bit, not as significant. There we go. It's slightly more in line with what we saw with oil, right? CEI has been rising the past couple of days. It's down today. Oil also rising past couple of days, down a little bit today. So CEI, if we see new highs on oil, that's when I would expect to see new highs on CEI, right? It's not going to be my biggest play out there because obviously over the long term, I don't think oil's going to be, going up forever, right? I don't think we're going to see $100 oil for eternity. I think that we could get much higher in the short term. There's obviously going to be anomalies that can happen with the price of commodities and assets. We could certainly go higher than where we are and higher than where we've been. But over the long term, it's very tough, very, very tough for oil to stay above $100 a barrel. You can see there's been relatively few times that we've been able to do it for any significant period of time, and it typically doesn't last for very long when we do. The whole Russian supply crunch isn't going to affect us all that much, but we'll see. And Mike Steele, thank you again for the super chat. What are your thoughts on AMC? You think a squeeze? We will pull up some AMC. So I am in AMC, and it's one that I think we could see coming back in a big way. We've already seen it come back in a pretty big way, even over the past 2 weeks. So from the lows to the highs, let's see what we got for AMC right here. From the lows to the highs, 13 to, from the lows to the highs, we're up 70% to where we're at about 50%. We'll pull up the short interest on AMC real quick, see what we got on Ortex. In terms of a squeeze, we'd obviously need to get a whole lot higher than where we currently are, right? Because if we weren't squeezing out, back in November when we were at $40, then we're not going to squeeze out now when we're at 30, right? So we would need it to get probably past where it's gotten prior, around 70-something bucks is where we'd want to be getting to start really seeing a potential squeeze. But it's going to take, obviously, a lot of attention, a lot of momentum, which we certainly could see coming back, right? We're already seeing a lot of attention and momentum flow back into the meme stocks, and I'm very hopeful that maybe around the time that we get cannabis legalization, or at least significant talks regarding cannabis legalization, we could potentially see even more meme stock driven rallies. I think that could be very good for AMC. Typically, those have gone hand in hand. They actually, AMC, initially around January 1st, we'll pull up the sundial chart also and have that next to it. They pumped at the same time, right? Or sundial pumped shortly after AMC, right? AMC was still somewhat on its pump while sundial was pumping. So, and then again, right, around 6.3 and 6.1, AMC was pumping up, sundial was pumping shortly after. It might be the reverse. Maybe we see sundial and these other meme-driven cannabis stocks pumping up. Maybe some other non-cannabis, but still meme stocks would be rallying. They do tend to happen around the same time, right? Cannabis tends to be a more meme culture substance, I suppose. So, Sub-Zero, we will get to that question in just a second once we finish talking about AMC. So the short interest on AMC, notably, since we've seen the peaks, actually, has been increasing. So we're actually near all-time high short interest on AMC, 108.89 million shares short. So pretty significant stuff. And we're getting close. You know, we already should have ended the stream a couple of minutes ago. But let me put in a quick poll. Your top stock, before we end it. And we'll put in, and then we'll get to Sub-Zero's question. And thank you for the super chat. We'll do AMC. We'll do sundial. We'll do, what else do we want? We'll do sen. We'll do sen. And GME, right? And that should give us a good range. So your top stock, feel free to vote in the poll. Vote real quick, guys. Feel free to like the stream while you're voting in the poll. I just activated it. We'll talk a little bit more about AMC, and then we'll talk about the hair, because that's something that I'm very excited for, right? So AMC, right? We've been moving down for the past many, many months. Now, the short interest has actually been moving up while the price has been moving down. So we might not need to get as high as we did in the past to really start squeezing out some shorts. But a lot of them you can see we're in at these lower price points, and while some got squeezed out, right? Some got squeezed out, causing a big uptick. A lot of new shorts got in at these higher prices and are actually in the green. Some have probably taken profits since then. If anyone was smart, they probably took profits when it was around, $15 or so, especially anyone who was shorting up there. So a lot of these shorts probably now have a lower cost basis than they might have had if they were just shorting $70. So we have probably eliminated some of that worry, but we'd still probably need to get to some pretty significant price points. I mean, it's impossible to say. It really depends on how much capital the institutions that are shorting have. That's really what's going to determine how long they can hold on, right? Because they could hold on indefinitely. If they have infinite capital, then they never really need to cover their positions, because they can just keep on upping the amount of capital, and they'll never get margin called on it. So the margin calls are really what force shorts to cover. But if there is ever a threat that a stock is going to move up and never come back down, that's when they would want to cover as well, right? They would want to cover if they thought the stock was going to continue moving up. So there are a couple of reasons why we might see shorts covering, but it's going to be tough, right? We're probably not going to see it in the next month or so, unless we really see a big explosion. Obviously, things can change fast. In fact, AMC was just around the initial price that it was at right before the squeeze. So, I really shouldn't say that it couldn't happen in the next couple of months, because it did just happen over the course of a couple of days. And I'm sad that I missed out on the initial run-up. It really did happen over the course of a week or two. So, I mean, anything could happen if it's never looked better than it is right around now, I suppose, in at least the past couple of months. We've not seen a better chance that AMC's had to really start running up. So, it's one that I'm hopeful for. Obviously, it has a huge following, right? It's always pretty much, if we can pull it up wherever I left it, the number one on StockTwits. It's always pretty much the number one there. It would be nice to see it getting back up on Reddit, right? It's usually pretty high up there, but GameStop really took the cake with 114,000 upvotes. Now, for Sub-Zero's question, what are your estimates for when we'll get to see the hair back? Hopefully soon. I'm really hoping that will be sometime soon. I'm very close to being able to reach this arm where it would need to be to really use a blow dryer. It's just holding weight. That's the issue. Now, also, I'm probably going to be having a surgery on it, which will likely make it a little bit worse. So probably, my guess would be starting from now, within 30 days, within a month, we'll probably not have to wear the hat anymore. That's my hope. I'm hoping it heals quick because the initial break, it took about a week to heal to this point, right? It's been actually 1 week today since the initial break. If I have surgery at some point in the next couple of days, then it'll probably take another 2 weeks from that, is my guess, before it's really good to go. Because I could see it being very, very good in another week from now, right? Ready to start using a hairdryer again. But we'll see what happens with it. So that was the stream for today. We've gone a little bit late. It's 10:07 now. But there was exciting stuff going on, right? Sundial, it looks like. We'll pull up Sundial. It looks like Sundial's been doing pretty darn well. Yep, Sundial up 4.3%. The markets overall are green. Exciting stuff is going on. So that's what we've got. Thank you guys for joining us. Keep in mind, for the next while, we'll be starting about 5 minutes before market open. So 9:25 Eastern Time, 6:25 Western Time. If you're watching it in another part of the world, feel free to catch the playback if this is happening at night or something for you. And other than that, guys, that's what we've got. Feel free to check out the Locals channel. That is certainly a good place. I'll be posting there daily. I'll definitely be getting back into that now that, I'm starting to feel a little bit better. So definitely check out the Locals channel. You can sign up for free if you want. And other than that, guys, that's what we've got. I'll see you on Friday. We'll probably have to end the stream a little bit early on Friday because I do have a doctor's appointment close to when the stream is ending. So I'll have to make sure to get there. But other than that, guys, have a great day. I'll see you tomorrow.